Thank you so much for your time today, Ifueko. Let's get into Nigeria's debt strategy, looking at what we've seen so far from the DMO. Nigeria debt hitting up 2.9 trillion naira. What's your take? Can you hear me, Ifueko?
Yes, I can.
If you can hear me, Ifueko, I just wanted to get your take on Nigeria's debt strategy, looking at how we've seen the debt hit about 2.9 trillion naira in December.
Okay, so I mean, I feel the numbers are a bit worrisome. Although DMO tried to also deliver it with some soft landing, so it's about a 700 billion difference from the report we saw in September. And I think the challenge still remains, because while they've shared these figures, they also shared with us that the debt to GDP ratio remains within the acceptable threshold of 40%. I think the debt to GDP ratio is about 26.1. But the real concern still remains the debt service to revenue ratio. And for 2020 alone, that was about 83%. So, I mean, and just given the structure of our budget, which gives so much to the debt service and for recurrent expenditure, then you have like just a very small amount for capital expansion, capital expenditure to raise more revenue. So those are the things that are really of concern. Telling us about the acceptable threshold of 40 or 26.1 really isn't really good enough, because I mean we still have to deal with the fact that we're spending a whole lot on debt service.
All right, now looking at the sentiment, let's look at the investor sentiment in the market this week. We've seen the barrage of economic data coming into the markets. Inflation coming at 17.3%. We're also seeing unemployment at 3.3%. How's the market digesting all this information?
Okay, I mean, the inflation rate is expected. For a while now, investors really have been trading away from inflation rate, because one would think that at where inflation figures are, there should be no holdings at current levels because they are well below the inflation rate. So at this point, traders are really trading outside the inflation rate, and these inflation rates are expected. But in the bills market, what we're seeing really is some mixed sentiment. But today in particular, it's quiet because of the primary market auction. But the volume we're seeing is just about 47 billion, except the CBN sales beyond what they are offering before we would see any significant change. But we don't expect any significant change in the stock rates. In the bond market, we're also seeing quiet sentiment, but with a bearish undertone, and that's because yields are expected to go up in the next bond auction, which is supposed to hold next week. So we've seen yields just inch up slightly, about 20 to 25 basis points on the longest tenors. So that's why the coupon payments we're expecting this week, I think of about 150 billion. We're just seeing the market is quiet. There's just a bit of cautious trading because the outlook is that the maturities are thinning, and then the supply of securities as well is low. So there's just a lot more cautious trading, and if at all, then there's just a bit of selling to prepare for the upcoming auctions.